Hey everybody, it is Wisdom Wednesday and it's Brett with Buckeye Dealership Consulting. And again, I have Jim Rhodes from the Octane Group here, and we're talking about collections some more. Last week we talked about, different issues revolving around collections and, kind of different schools of thought. Today we're going to carry on that same thing, and we're going to talk a little bit about a couple of things that happen during the life of the loan. Like, okay, we sold them a car, we've got them on the books, they drove over the curb, and then what are, three common things that kind of happen, throughout the course of almost every single buy here, pay here loan at some point during the contract, and what are the different schools of thought for how should these be handled, and is it universal or is it kind of dealer specific? So the first thing I want to talk about is, okay, we've sold the car, 6 months down the road, all of a sudden, there's a mechanical issue of some kind, and the customer is refusing payment, or, they just paid to get the car fixed themselves and they don't have the money. What are the different ways that dealers are handling, repairs like that, or mechanical side notes, things of that nature?
Sure. So yeah, we can get to covering that. And obviously the answer on this varies. I mean, dealers handle this in all kinds of different ways, but I think probably the important thing to do first is to circle back and say, I can't remember if I mentioned last week that we did a survey of dealers, and we're not finished. We're still working through some collection surveys, but amongst the questions that we asked was, can we confirm that most buy here, pay here dealers recognize that how they buy the car, how they price the car, how they close the deal and do their underwriting, all those things affect collections. That all sounds like sales and front end kind of stuff, but we have to recognize first that all those things affect how we handle collections. So, first of all, I would want to know how the loan was closed. I mean, what did we promise the customer at the time of delivery? That's going to have a lot to do with how we're going to handle this thing 6 months in. And then, my big deal is anybody that's ever worked with me, all my clients, anybody that's ever, worked for me in my own dealership, hears me use the phrase fair and consistent. In other words, I never want to do for one customer what I'm not prepared to do for every customer. So that just means I got to be consistent in the way I do things. And so that goes to kind of how we close this loan. It has a lot to do with how we're going to do it. Now, how do dealers do it? There are people out there doing as is with no warranty. They're going to help a customer through repairs. Obviously, not every dealer out there helps a customer, right? So it's on the customer, and they have to figure it out. And obviously, those dealers I would expect would have a much higher repo rate. Then there's the dealer who does as is, no warranty, but probably offers some help financially throughout the deal. And I always think about, back when I had my own dealership, we were strictly as is. And so we did a lot of side notes and help with loans. And my thinking was always, and I'm training new managers, thinking, what's the value of our collateral if we do nothing? And then what's the value of our collateral if we step in and help with an $800, head gasket or something, whatever the numbers are. And so the reality for me is, we make that judgment by what's the likelihood that we can find the customer next month, because if we can find them and we can recover the collateral, then all we're really doing is helping improve our own collateral, which we'll recover if they don't perform. And if not, we've improved our collateral and they're going to pay for it. So that's step one, is kind of as is. And then the other would be, third party service contract. There are dealers out there and buy here, pay here who will pay for a third party service contract. And, whether it's a 3 month, 30,000 or 3,000, whatever it is, it's, you've got a third party service contract. And then the last one would be some sort of a warranty program. And of course, I realize I'm talking to Mr. Buckeye. So you guys do the reinsurance thing. So you guys know, you can better speak to, all the solutions on the reinsurance side. And we're big proponents of reinsurance. We've seen, I think I first set up a client on reinsurance in 2008. We've seen every dealer virtually that we put on reinsurance be extraordinarily profitable. And I always tell them, look, yeah, you're going to make a lot of profit and you're going to manage your claims better. But my big thing is, and there's obviously some tremendous tax advantages, which you and I don't have to go into today, but I just know that I always tell my clients, look, even forget for a moment the tax benefits and all those things. If you just could service your customers more quickly and get them back on the road, you can handle claims, mechanical claims quickly, get, under warranty or service contract, whatever, get the customer back on the road quickly, then we know the customer doesn't want to pay when the car's not running.
Right.
And we can step in there and just say, tell you what, we'll help you. We want you to continue to make your payments. And as long as you make your payments, we're going to step right in. Obviously, with the warranty, we're going to do what we're obligated to do no matter what. But there's different ways to address that. But we really just need to have a solution. And all those things kind of come under the category of customer service to me, which I think of as being completely different in buy here, pay here than it is in the retail world. It's just it's a whole different approach to customer service. We still servicing and supporting the customer, but in a much different way with different programs, right?
Yeah, exactly. And I think, one of the things you talked about was be fair and consistent. And I think that's important. And me putting my, kind of compliance hat on is there's still, a lot of situations and a lot of dealers who they're trying to be fair and consistent, but they don't really have it in black and white,
Right.
and that opens up everything to interpretation. And, that's just not, I think, an arena anybody wants to or should continue to play in anymore, just with all the consumer advocacy groups. But the other thing is, you talked about, fixing it and how do you keep the person in the car and the customer service, right? We talked about that last week. Is servicing the car, a function of collections? Yeah, absolutely. Because what's the car worth to us if it comes back?
Right.
Especially if there's something wrong with it. Like if you got a car that has, no heat or, some of those nuisance issues that really, especially like heat in the wintertime, right? Up where I'm at, like, heater cores or whatever it is, it's always a problem. It really makes things hard on the customer. Do we want to pay for it? No. But what's the option?
Sure.
What can we fix a heater core for? And if we repossess the car and we bring it back, we're gonna fix it anyways.
We're putting the heater, yeah.
In the car. And the way I always tried to look at it was, if I could do the right thing by a customer, and everybody, if I had a predetermined date, like if I could see the future and I said, hey, this person's going to charge off on this date, and I could do that for every one of my customers.
Right.
But I also knew that if I just would have serviced this thing this way, and if I would have made this exception, I would have done that, I could have got all of my customers to pay an extra 3 months or an extra 6 months longer. What does that do to the profitability of your dealership? What does that do to your charge off? What does that do to your collateral disposition? I mean, everything gets better.
Right.
With every payment, you get extra. The loan, and if you can take that type of mentality and just blanket your whole portfolio, and I think it's, fixing some of these things is short-term gain or short-term pain, but it's a long-term win. It really is.
Yeah. So when I think about long-term, I think about in our training, I started using what I call the 10-year approach. I ask my dealers to think about every situation in your business with buy here, pay here. If you think about it, and I think you probably were part of the conversation a month or two ago, I posed the thing about, of you folks that have been in business a long time, what is the longest customer you've ever had on your books? And you probably saw the answers of 25, 35 years.
Oh, yeah.
So had their customers. So I ask dealers especially when they're new to the business, think about bringing a 10-year approach to every situation, especially in collections. So whether it's a job change or whether it's a mechanical problem, an accident in the car, it's like, if we think about what's the likelihood that if we get over this hurdle, that this customer is going to be with us for 10 years. Or they still live around here, they still got the same job, their family's here. Are we going to be able to work through? Is this just a temporary hurdle and it's like short-term pain, like you say? Can we get past it? And if so, is this customer going to be with us, for a long time? If we can bring that sort of outlook into everything that we do, then we'd have a lot more successful customers, a lot fewer repos. So it's just a matter of, working through it. Of course, we don't want the customer to take advantage. That's what we have to kind of walk that line and make sure that we ask the customer to accept responsibility for what is theirs. But we certainly have a financial interest in seeing them get over the hurdle.
Yeah, and I think there's absolutely a way to even take a customer with a tight budget, whether it's through third party or reinsured stuff, having a deductible. Do we want them to have some skin in the game? Do we want them to feel a little pain? Yeah, because pain means ownership. We want them to take ownership. We have to break that renter's mentality and get them to realize, like, I'm not your landlord. When it breaks, you don't just call me and I come fix it. This is your car. But the other thing is, buy here, pay here dealers all across the country tend to be very localized, right? Retail dealers are shipping cars all across the country. They never met the guy. You start burning a bunch of people in a 100-mile radius, sooner or later, they're all going to know who you are and what your reputation is. And that can either be the reason that you're super successful, or it can be one of the reasons why your competition or the other 2 or 3 guys who are all small have portfolios twice as big, because I mean, the customers talk, they all know each other, they all hang out at the same places. And, you know, again, it comes down to just, you know, customer service, helping them through some of those pains, but just, you know, on their budget, just not for free, right? Like, don't do things for free. They don't appreciate free oil changes, free anything has no value to them. And I think it just perpetuate the renter's mentality rather than teaching them that, hey, this is the cost of ownership, which the rest of us understand. So
And I've seen, you know, we've seen dealers try to do the free oil change thing, and I think you still have a hard time getting your customer into the service department to get your free oil change. Like you gotta, but they need to pay a little something, and then you need to obviously lobby for that. But there's other ways to solve that problem. But circling back to what you said about the you know, the 100-mile radius thing and how your reputation, I think that's even more true the smaller the market is. You know, when you're gonna have to have that repeat business and referral business when you're in a smaller market. And frankly, that's a lot of the dealers that I work with. You know, over the years, I've worked with dealerships that have thousands of accounts and $50 million portfolios, but I work a lot more with dealers who have 200 to 400 accounts and, you know, $5 million portfolios. So, you know, when you're in that size market, you just really got to make sure you take care of your customers and keep them. Like I said, if you can keep them for 10 and sometimes 35 years, you know, that's a more, that's a better financial plan, you know, when you can take that approach.
Yeah. So, you know, 6 months in, you've got a mechanical issue. Your options are, you're either a dealer who just eats it. You're somebody who has a third party service contract, or maybe a reinsured service contract, which, you know, we always tell people, well, all we're doing is setting up a better way to account for the transactions you're already doing, right? Do you require full coverage insurance? Yes. Well, then do it this way. Do you fix the car when they break? Yeah. Well, let's do it this way. And then obviously there's the benefits, right? But, you know, mechanical side notes, if you have to, you know, I think mechanical side notes for me is, if you're actually good at collecting them, do it. If you set up mechanical side loads to get 2 payments and then never try again and charge it off, well, good luck collecting the next payment when they're 6 months behind, because the customer remembers that you don't come after them and that it's not real.
Sure.
Either, you know, do or die those side notes, or just don't do them at all.
Right.
So same customer, they bought a car, 6 months in, there was a mechanical issue. We just talked about how to take care of it. 6 months later goes by. One of the things that you just mentioned is, especially pretty common nowadays, is job loss. Jobs change with a pay date change, or maybe the household income changed, right? Because of something medical or because of something else. When does a dealer know when he's being too generous and when, you know, enough's enough? Like, how do you, and again, I don't understand, it's very case by case, but
yeah. I think
perfect example for me to kind of lead you is, if a customer called me and said, hey, I'm having this issue, very nice, they would say, wow, that's horrible, I'm happy, blah, 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 but do me a favor, what? Prove it.
Yeah.
Prove it. I need documentation. Show me that your bank account got hit 2 times by us or by another company. Oh, you know, somebody died and you had to go get a rental car, right? That happens. So somebody always dies. Like, you know, show me the $400 rental that you had to get because my car broke down. And you know, and so I used to do some of it. So what's your experience with, how do you handle those job losses and those changes that are kind of out of their control?
You know, that's a good one, because, you know, we wrestle with that in our training. Like you're right, it's case by case, and I can't obviously train a new dealer or a new manager about every possible scenario that's going to come up. So you basically, the way I approach that is sort of, if a customer is showing good faith, and part of that is documentation, just like what they show up when you ask them to, they call you when they're supposed to, when they're showing good faith and providing documentation, then I just tell them, my recommendation would be that you go to the end of the earth with that customer as long as they're showing good faith and doing what they're supposed to do. Now, we all understand at some point that means customers got to make some payments. We can't ride for free forever. So that's where the judgment comes in. It's like, I'm going to work with the customer when they're doing what you said, they're documenting what's going on. I'll ask them for show up for an appointment when they're in between jobs and they're on unemployment and going to have to go do interviews. I'll meet with them. We'll ask a collection supervisor or somebody just meet with them every 2 weeks and just get an update. And at some point, you may have to, make the decision that, unfortunately, if we don't have some employment, firmed up by, the next meeting, we may have to have you turn in the car. The conversation could end up there, but that's a situation where, it is case by case. It's financial, but I think when we say case by case, we still want to be consistent in the way we do that. And I think for me, if I'm taking that 10-year approach into everything, then I know what I have to do. I know what's the basis of my approach, and I just work with every situation within that framework, and I'm gonna have a lot more successful customers and people that are happy to refer, folks to me because of the way we treated them and worked through a situation.
Yeah, and so I think about that, and again, it's like I said, it must be almost an impossible thing to train, because who you're going to work with, to me, is right up there with underwriting. It's just something you get good at.
Yeah,
you gotta make a lot of bad mistakes before you learn to make good ones, and you got to start to trust your buy here, pay here gut. When you're lending to people, and I think just like with their credit scores, yeah, we pull them sometimes, but you're not really looking at the score. What you're looking at is the story. Right. I think when you're trying to decide who you want to work on, does the story make sense? Can they prove it? Are they taking good care of the car? Is it a good thing? Did they provide the supporting documentation? And then you work with the people you can work with.
sure.
And so you also said something there just a second ago about, like, we're not going to let them ride for free. We got to take something. And that brings me to a topic that's very near and dear to my heart, because at least in my organization, it was very controversial for a long period of time, because everybody had differing opinions. But how do you feel about partial payments and date edits?
Yeah, it's interesting how there's two camps.
Like cursing.
Yeah.
If my dad heard me say that, he'd smack me in the mouth right now.
Yeah, no, it's interesting. I personally, I'm on board with partial payments. It's the same thing. It's like, I just know that the typical customer that we serve in Buy Here, Pay Here, if let's say they're paying $200 biweekly, if they're going to have a hard time, if I don't accept some payment this time around and I'm going to ask them to pay double, if they're having a hard time paying $200, they're going to have a hard time paying $400 at the first of the month. So I personally would accept, and again, this goes back to just being consistent. I personally would accept a partial payment, because I know that any money that I can get now is going to make it easier for whatever catch-up payment I'm going to ask them to pay. And so, yeah, I'll always accept a partial payment, because I just want to, again, my approach really is, I just want things in writing. We really emphasize, and this is where we draw a hard line with customers. We don't demand money in our approach. We demand an understanding. Yep. And so we'll, whatever the payment can be now, we'll accept whatever payment we can do now, and then we're going to write a written understanding for the rest. So I'm a stickler for that. We'll work with people so long as we have an understanding in writing and they're following through on that understanding. I'll bend and bend and bend, but we want to see them follow through on whatever understanding we put in place.
Yeah, I was always okay with partial payments. There was, people in our organization who were not, but I agreed with you. I said, like, they look at everything, our customers look at everything as like a mountain to climb, right? Every problem. It's like, do you want a $400 mountain or do you want a $250 mountain? And then it's like, okay, and my particular situation is, we did have, very large bank lines of credit, and we had, 30 plus delinquency that we monitored pretty closely because of that. And so, no, you didn't want to let things go out. But if I can take a partial payment from someone, and if I can say, okay, Mr. Customer, here's what we're going to do. You pay me the $150 now. Let's see what you can come up with next week. And then you're going to be $100 behind. That's an additional $25 a payment over the next 4 payments. Let's do that. And I'd much rather carry somebody delinquent for, 2, 3, 4, 5, even 6 months. If, again, the good faith was there.
Yeah.
supporting documents were there, a large mechanical repair outside of their control, something like that was necessary, I'll do that. I never agreed with, I was just never a big fan of date editing. I think it muddies the water. I think you lose track of the legitimacy of your portfolio. I think you're fooling yourself. So how do you feel about date edits, or what's been your experience with? Because I feel like that is just something that can get way out of hand, and then now it's like you don't really know where you're at, and I just think it's just not a good practice.
I'm not hearing the phrase that you're using. You're saying data, what'd you say?
Date edits, like you got somebody behind, they make couple payments, and you just kind of like edit them current.
Oh, I haven't heard it called that kind of phrasing, but yeah, so there's all kinds of different labels for that, right? But I don't like that. I like to stick to the contract. Like I definitely, and I would rather see the customer on the past due list, but that's a whole different subject, a big can of worms for you and me, which we can cover on another day. Like, I think I recommend that approach with the one you just described. It's just that you do pay a price in delinquency. So if you've got collectors being compensated on delinquency, then you could have a problem that way. It could kind of create some attitude, right, within the team. But yeah, I'm definitely a big believer in being cooperative and flexible with people, because like I say, if I'm going to take that 10-year approach, I don't mind if a customer needs 4 weeks to get caught up. I'm trying to make it workable for them, and I'm going to ask them to stick to whatever we agree to. So I want to make sure it's manageable for them. I just know, I've always told the story about how years ago when I was managing a store, I had an assistant manager who came out of law enforcement. He was real tough, and he used to write these payment arrangements and this big deep voice. He's real rough with people, and he would just tell them, here's your payment arrangement, here's when you're going to pay, sign here. And I got to noticing that all of his payment arrangements were defaulting. Like, people wouldn't show up for these payment arrangements. And it's just because he was setting the dates, he was setting the amounts, instead of working with the customer and figuring out what they could really do and really looking at their income and rent and the whole thing. He was setting the terms, and the customer would agree to it because they were afraid of him, but in reality, they couldn't do it. And so I'm just a big believer, and you got to do what works for the customer, get them over the hump, and keep them paying, right? Keep them in the car, and ultimately try to get them to a day where they can pay off or trade into another one. So, it's funny. It's one of the things I love about our business is that, you can have your approach, I can have my approach. We get to kind of write our own ticket and buy here, pay here, and set up what kind of practices we want. We've got that kind of flexibility. It's just my recommendation to anybody. You could pick yours. I would just say be consistent in whatever you pick. And I'm going to try to do the same. I just think it's really important that, we stick to whatever we choose to adopt as a practice. But I just think that whole 10-year thing, if we bring that sort of outlook into everything that we do, then it just is going to affect all the decisions that we make on the collection side.
Yeah, and that's overflow from what we talked about last week, which was your culture has to match your policies, right? Like, you can't have a policy of compassion and say, hey, we work with people, and then pay people solely on delinquency, right? Like, that's counterintuitive there, right? Like, no, just work with people, but if you do it, you won't make any money. It's like, hold on a second, that doesn't make any sense.
Yeah.
So I think, like, you need to be smart about and make sure that your people and your pay plan are in alignment.
Yeah.
And that's hard in the car business, especially on the retail side with service departments and sales and used car manager and the service manager. Nobody hates each other more than those guys, because they're both trying to, if the service manager does a good job, the used car manager hates him because all of his cars are too expensive, So I think it's just important to have everybody on the same page.
Yeah. And we see it on Buy Here, Pay Here. We see the conflict between sales and collections for these bigger companies where they're separated. You get a lot of conflict that way. So I've been called in to kind of be a referee on some pretty big operations where they were at odds, between sales and collections. So yeah, it's something we see in Buy Here, Pay Here, but you're absolutely right. I think the pay plans have to align with whatever the philosophy of the dealer is going to be, and the way that they want to do business, the way they want to be known in the community. You have to have your pay plans and your people sort of on that, and it all ties back to culture, like you said.
Yep. And then the last thing that comes up all the time, and I get asked this question a lot, mainly because obviously we do a lot of CPI, is, I have, dealers who have habits of, as soon as the customer doesn't have car insurance, it's like one phone call, maybe two, and then they're picking it up. And then there's other people who knowingly have 30-40% of their portfolio driving around without car insurance because, hey, as long as they're paying me. So if you were to walk into a dealership that was, really quick to, pop someone, and then a dealer who was maybe a little too lenient? Like, where do you fall in that process? And then, like, what would your advice be to those guys?
Again, I think it's business practice. It's like every dealer gets to kind of pick how they want to do business, and they can write their own rules. I think for me, it's more of a financial decision. Like if I were advising them, I would try to lay out the financial benefit for each one. And I think the reality is, if we were in any dealership anywhere, we could come up with a reason to repossess virtually every customer every day. Like we can come up with a reason to get our cars back. So it's more a question of, how flexible do we really want to be and how cooperative? And, the reality is it's in the mathematics. Is if I'm in a situation where I've got a pretty low risk window and I'm broken out of my cash and deal on the car, I can be flexible on that, but I think I don't know that I can answer the one way for everybody, because everybody's got to have their own. That's, like I say, it's one of the nice things about buy here, pay here. They don't have to do business the way I think they should do business. Everybody can pick their own business strategy. So the answer really to me is in the mathematics. It's really financially speaking, where are you at in terms of your risk, and what's been your policy? What did you tell the customer at closing? Because I think you need to do exactly whatever it is you told the customer at closing. And so that to me is just enforcing whatever your practice is going to be. I just see that it's challenging to enforce full coverage. We just see that, regardless of what the insurance companies are supposed to do, too often by the time we get notice that the policy is canceled, it's already lapsed. We're already out of coverage.
Already an impound, yeah.
Yeah, and so you guys know at Buckeye, I mean, CPI is a huge solution for that, and so we highly recommend that for all of our clients. But it's like it's an enforcement measure, and you got to measure how much time and effort are you going to put into enforcing that insurance. And we need better solutions, and CPI is definitely among those where all we're doing is enforcing the collection of the premium ourselves, and we've got more flexibility in that. So I'm a big fan.
Yeah, I think I look at it the same way. I think it's very much store specific. And for me, it's all about managed risk. I think, if I see a guy with, $3,000 and $4,000 ACVs who's picking up cars because of non-insurance, but the guy was making their payments, I kind of be like, really? Like, yeah. It's growing, you know what I mean? Now, sure. As you move into the more and more expensive car and you realize that your outstanding risk on the road is $8,000, $9,000, and $10,000, not $2,500. Well, then I think it probably needs to be a little more important. And if you're requiring full coverage insurance, right. If your collectors are having a hard time, a lot of dealers out there have success with having that person who just does insurance. Yeah. They stay on it. They're constantly verifying it. They're handling those slips when they come in and getting on those people and getting the full coverage. Sure. And I think it's important, but I think, sometimes, maybe we get lost in the weeds and we have too heavy a hand on things we shouldn't and too light a hand on some things that we shouldn't. But,
no, I think my answer on that would be, it reminds me of the way I used to say it when I was a dealer myself, or even a manager before that. I would just say, I can give you more time to catch up your insurance premium, but unfortunately the car's going to have to stay parked at the dealership until you get it caught up. It's like, it is a repo situation, but I'm just saying I can, there's no problem with me getting you more time. I just can't let you drive the car and not have insurance. So, there's no problem with working out time, but it's just a matter of you putting the collateral at risk. So yeah, it's kind of falls in that category for me.
Yeah. So, I think the running theme here over the first 2 weeks for collections is, make sure you've got the right people who know what they're doing. Obviously, compliance is a big deal. Make sure that your business practices and your culture and your pay plans, sync up a little bit. Mm-hmm. And it really is about just, knowing your market. Sure. Stores can be very different. They all have personalities of their own, there's dealers out there that have got to fix every ding and dent and scratch in the car. And there's guys who don't have to do none of that. And they're both selling 35 cars a month at 20+% interest.
That's right.
And the portfolios can perform very, very similar. It's just the expectations of the customer, the perceived value. But what doesn't change is, like I said, we're in the collections business and we're in the stuff happens business, and stuff happens to our customers all the time. Yeah. And you got to have a good policy in place that everybody in your dealership understands to deal with job losses, How do we handle somebody who's not paying? How long are we going to let them? How do we work with people? Mechanical, just all of those things is it's worth spending time on or talking to someone like yourself about rather than just shooting from the hip case by case every time. I think you take rules that you have in place and you apply them case by case. I don't think you just put nothing down on paper, do no training, and handle each situation just completely differently. I don't think that works. I think you need to have some type of focus or at least an idea of what you're going to do.
Yeah, I think, we're on the same page there. So many different ways to do business. And I always tell people, look, there's lots of different business models out there and all of them can work, in different ways. So it's a question of you choosing what works for you. But I think the key is really understanding the customer that you're serving. And then for us at Octane, we really teach a real compassionate and flexible approach. And not every dealer is on board with that sort of thing, but that's what we condone in our training, and our whole training process is anchored in that, where you're going to work with people that earn it. I mean, they gotta earn through good faith and through verification and whatever. And when they do, then we're going to work with them and show compassion for them, because most of those customers are in a tough spot. They've got a lot of pressure on them. They're low income and they got a lot of responsibility, whatever. So there's a lot of pressure there. And the better we understand the customer, the better we can serve them.
Yeah, and it's easy for us to be judgmental. The nicest lady you ever sold a car to misses her first payment, and the biggest jerk you ever had made every payment. You never heard from him ever again. You just got to roll with the punches in this business and do what you think is best, ultimately for the customer and for your business. And I agree with you. So thanks again for your time.
Yeah, of course.
We'll get finished up here. Again, guys, if anybody has any questions or comments or wants to add, throw it in the comments. Reach out to Jim. To talk a little bit more about collections, and we will talk to everybody again next Wednesday.
Very good. Thanks, Brett. See ya.
Have a good one, man. Talk to you later.
Bye.